Hello guys, welcome to another training video with Forex Trading Signal. This is Ahmed Al-Aziz speaking to you, and today guys we're gonna go to discuss about the candlestick patterns. However, we're gonna go to speak about the candlestick formations and candlestick locations in this video. So if you see here, there are a lot of candlesticks type and there are a lot of shapes. So if you don't know how to trade those candlesticks, so this video is very important for you, and this will make you to understand the candlestick pattern. Many of us, they don't know how to trade candlestick and they don't know how to predict the patterns from the candlestick. So you don't know whether this is a location for buy or this is a location for sell. So in this video, we're gonna go to teach you three things. We will teach you the candlestick most important types. We will teach you the candlestick formation, and we will teach you the location of the candlestick, the importance of the location of the candlestick. So stay with us, please. We will start in a moment. So candlestick differentiation and identification. So candlestick differentiation, guys, between bearish and bullish candlesticks. First, we have the bearish candlestick type and we have the bullish candlestick type. So let's guys differentiate between these two types. So let's say I have two candlesticks and I will differentiate them by the color. Let's say the bearish one is red. So that means if it's a red candlestick, means it was a bearish candlestick. Let's assume the other way for the bullish one. If the price opened down and closed up, that means the price was going up and it was buy candlestick. We call the buy candlestick bullish candle. So let's guess that the bullish candlestick is a green color. So the green colors mean bullish, the red color means bearish. So now we are differentiating by the color, guys. If you go to the chart and you set up your bearish candles, red, whatever the red candlestick on the chart, it is bearish. However, if you make your color for the bullish one green, whatever green in the chart, it will be bullish. So let's continue. Now, for the bearish one, price starts from top and it goes down. The price goes down. Then after that, price close in the bottom. Then the close price must be lower than the open price, and that's why or how we get the bearish candlestick. Now, the area between the open price and the close price, we call this the body of the candle, and the color will differentiate between bearish, the sell candle, and the bullish, the buy candle. However, this color can be set manually by you the way you like. So you can make the bearish one black, white, whatever. You can make the bullish one blue, green, whatever. So let's continue. So in the bullish candlestick, the price opens from the bottom and goes all the way up and the close on the top, and always the close price is higher than the open price. And this is the body of the candle, and what is differentiating two candles? Only the color. So because those two candles are identical the same, the only way to differentiate by visually, it is the color. So if I look on the left hand side, I have the red color, which is bearish, because I have set up the red color for bearish, and I have the green color, which is bullish, because I have set up the green color for bullish. So this is how I differentiate. Now, let's talk about these two areas. Those are the highest price. So we call this area the highest price. This is the tail of the candlestick or the wick of the candlestick. So the area here, the area where the price was opening from here, gone all the way up, reach that area, but it couldn't hold here, and it's closed just below it by maybe 10 or 30 or 50 or 50 pip and whatever. And we will explain this in the candle formation because this wick is very important for us. Similarly here, the price was open here. We don't know how many times it went up and down. However, the highest price it was reaching here, then it came back and it closed here. Then additionally, this price was always going down and came back. Now this is the highest price for the two candlestick, and this is also here the lowest price. It is identical, same like the highest price. So this is the lowest price. So if you see the low price and the high price for the two candle, whether it's bearish or bullish, we take always the highest point of the tail of the candle, regardless. So this is the lowest price. And now guys, these 4 wicks or 4 areas are called the wicks or the tail. And this is very important, guys, to know those tails. Those are very important and sensitive in our calculation and our prediction. So now guys, we finish the basic information about the candlestick, and now we are moving to the formation of the candlestick. So guys, I want you to look into these two candlesticks. So we decided and we said red candlestick is a bearish, green candlestick is a bullish, and regardless of the color, we set up the color. So this is the first type of the candlestick I want to explain. Actually, there are so many type of candlestick, but however, I want to speak about only 5 type of candlestick, and those 5 type of candlesticks, most of them are identical, but the differentiation is in the wick. So let's discuss them one by one and see how much they are important. So this is the first type of candlestick, bullish and bearish. So the red one is bearish, the green one is bullish. So this is called engulfing bars or engulfing candlestick. What does it mean? Engulfing candlestick means that the price opened either from bottom and closed on the top and doesn't have wicks or tails, or sometimes having very minor small tail. So we call these engulfing bars. The engulfing bar actually engulfing everything before it. So it eats all the candles before it. That means it's larger inside than the other candle. So what does those candle means? And this is very important. Those candles mean either strong push up or strong push down. So this is the two things I want you to know about this. So now we come to bottom and tail bars, those called bottom and tail bar, and this is bearish, bullish. So in a moment, if you look to this candlestick and this candlestick, or this candlestick and this candlestick, you will see that these candlestick in a moment, they were identical, the same to this candlestick. So let's take this as an example. The price has opened here and was pushing all the way up, and it reached this area. Then seller has stepped in and they have pushed the price back and they have closed it here. So what we are trying to say, when the price was moving up, this was fully green like this. What does this mean for us? This is bullish candlestick and this is buyer candlestick. So when the price was moved up, there are a lot of people, they have bought the asset or the gold. Then after that, it has found its seller and it has pushed the price down. And the seller, they have pushed the price down and they closed down. So what does this mean? This means rejection candlestick. So if the price was opening down and went all the way up and it has pushed back strongly, this is a rejection from seller. We call this rejection. Similarly, this candlestick, for a moment, it was fully like this, 100% the same. So the price is opened here, went all the way up and couldn't hold this area, and the seller, they have pushed it down, and it was a rejection from seller as well. So let's move to another one. So we call this spin bar. The spin bar is the bar where it's forming shape of a spin bar. So in the spin bar, almost the body in the middle of the bar and the wicks are identical, not 100%, but identical, same always, and the body in the middle of the bar. So when you have the body in the middle of the bar and you have long 2 weeks from top and bottom, and it's identical the same, not 100%, but you can say 75% is identical the same. We call those spin bars. So spin bars, it's representing exhaustion. So what do we mean by exhaustion? So let's take the bearish example. So the bar was opened in this area, it went all the way down. We don't know whether it's went down first or went up first. So it went all the way down, there was a sell pressure. It went all the way up, there was a buy pressure. It went again all the way down, there was a sell pressure. That means it is fight between buyers and sellers, and at the end, nobody could hold the price either down or up. So it's an exhaustion from buyers and sellers. This also similar here. It's a bullish one. However, it's an exhaustion at bullish stage. So let's discuss the second one. So this is top and tail bar, and this is also represent or confirming rejection. So again, the price opened on the top, went all the way down. Seller, they have pushed it down, then buyer, they have rejected. So here the price was open on the bottom, went all the way up, then down, then buyer, they have rejected it. So what is the difference between bottom and tail and top and tail? This is rejection from seller, this is rejection from buyer. Now the last one I want to say, it is the doji bar. The doji bar, it's a bar where the price has opened and closed on the same location, and that's why I'm putting this color in gray, because it's not red bar and it's not a green bar. So it's uncertain bar where the price has opened and closed on the same location, and there is nobody has won. Now guys, so we said price open up, close down, engulfing bar, this is sell strong. Price open down, push up, this candle, engulfing bar, this is buy strong. Bottom and tail, price has pushed up, but it has been rejected by seller. This is strong seller. Price pushed up, again rejecting by seller. This is strong seller. These spin bars are exhaustion from seller and buyer. Top and tail bars are rejection of buyers. The sellers was pushing down, but the buyers, they have rejected it and they have pushed it back up. And doji bar, it's uncertain direction. However, the question is, can we trade this bar when we see those bars on the chart? Is it enough to go by the formation of the bar? Let's say I'm looking to this bar and the price in a moment was fully like this, and I can see rejection, and this bar has converted to this bar. So is it enough to trade based on the bars? No, of course not. So there are confirmation you need to take in your concentration. First confirmation, first thing you need to understand, those bars are very strong, the strongest 5 type of the bars you can see on the chart. You take this number 1. So you get to remember those type of bars and you need to monitor this part. But be careful about the second condition. The second condition, the location of the bar is very important, because I might see these bars every single minute. But however, it doesn't mean when I see this bar here, for example, the top and tail, when I see this bar having too much sell, then the buyer pushed it up, then this is a buy candle, let's go and jump into it. No, you need to know the location on the chart for this candlestick. So first, you need to know the formation, which we have explained here, whether it's rejection from seller, it's rejection from buyer, it's exhaustion from seller or buyer, it is strong buyer, strong seller, or it is unknown uncertainty from buyer or seller. So you need to know how this has been formed, but however, you need to know the location of the bar. The location of the bar is very important, and you need to know also the combination of these bars together. So I might have engulfing bar and spin bar. I might have rejection and spin, rejection and exhaustion at the same time. I might have doji and spin bar. So the combination of the bars will play the role in you predicting the chart. So let's discuss on the chart how we can measure those and see whether those candlesticks can be helpful for us and we can predict the trade from them. Now, let's look into those chart one by one. I am going to explain to you 4 charts and I will identify some of those buttons. So let's take first one. So what is this? This is spin bar, right? You can consider this as a spin bar or top and tail bar, right? So yes, it is not as per the study book 100%, but the idea of the top and tail bar, you have long tail and minor body. So look at this bar. So now I will take this bar for a trade. Why? First of all, the price coming from higher position and coming all the way down, and I have previously price oversold, and in this case we are discussing the location of the bar. The price is oversold, it has been rejected 1, 2 times, and I have seen the color change here and a breakout for this level. And after that, I am waiting my confirmation and I have seen bearish engulfing bar and then again rejection from buyer here at this area and another breakout here and then breakout and it has went all the way up. So this bar was a very good one to indicate for us that these buyers, they are now stepping on the market because of the location of the price. First of all, the price came after 1, 2, 3, 4 candles down. Second thing, there was a rejection 2 times from buyer, and there was engulfing bar from buyer, and there was support level, and there was bearish engulfing bar. However, this bearish engulfing bar couldn't break this support level, and after that they have pushed the price down, but they did not manage to hold it down, and the buyer have stepped in and pushed the price all the way up and formed this spin bar, and after that the price has ripped. So this was a good bar. So next one. So how about this one? This is also spin bar. So the price came after 1, 2, 3, 4, 5, 6 candlestick, and there is a gap here, 6 candlestick, and the price went all the way down. And in this area, it was pushing the price down. So this is another example of a spin bar, but however, you can see that this at resistance. So this is at support, this is at resistance. So how about this bar, guys? This is spin bar, but why this bar is not good? Because we have here resistance, we have here support. So why you want to trade this when this is not here? Or why you want to trade this when this is not here? So this location is not good because it's overlapping with other bars. So let's see next one. How about this one, guys? You see, guys, price went all the way up, doji bar, then go down, then consolidation, then rejection again here, then third rejection. So this was a very good one to sell. Why? Because the price has 3 times rejection and it is on resistance level, and this is a reversal button, and this is coming after too much buy pressure. So the price already exhausted here on the spin bar, and then after that it has resisted 3 times. Then after that it has pushed down and there is a breakout happened on the button here. Then this is my entry and I will go all the way down. So now You can see, guys, that we are not taking this bar for a trade. However, we are taking those bar for confirmation of the patterns. So now you combine the patterns and the bars formation. So let's take this one, spin bar. How about this one? For me, I will not trade this because the price is already resisting here. So what I will take this one, the engulfing bar, because it's coming after spin bar and engulfing bar. That means when these sellers trying to push, they are exhausted here, the seller, and now buyer, they have stepped in, and this is my entry. So if you look to this one, this is head and shoulders, guys. This is head and shoulders. Let me erase little. So if you look into this one, guys, this is head and shoulders, and this is the neckline here. So this is my entry, and this is what is confirming for me that it is exhausted. So now I want you to look into this, a continuation pattern after breakout here, continuation pattern, and this bar. So this bar, what does it mean for me? It's a spin bar, but it doesn't mean anything because it's not on the top of resistance, or it's not in the top of support, and it's not coming after oversell or overbuy. So this doesn't mean anything for me. So the location of the bar, guys, is very important. So how about this, guys? So let's put now here line like this, and let's put line like this, and this line like this. So guys, you can see here button, right? And when you look into this candlestick, you see that the breakout is here, and it's going like this, then it is going like this. So guys, the button location, it matters. So another example, so spin bar after oversold. So first thing, spin bar after oversold, and here breakout for resistance in this candlestick. So this candlestick confirming this. So now price went all the way up. So now oversold again. This candlestick, this resistance like this, and this now breaking up. So now, guys, I want you to look into these three candles. You can see here there is exhaustion bar, spin bar, and you can see here bottom and tail bar, green bar, and you can see the bearish engulfing bar. And this has eaten everything from here to here, whatever in this area. And this is also another uncertain bar, exhaustion, and this another engulfing bar, and the price went all the way down. So these guys confirming this, and this confirming this one, and we have had the breakout in this area. So this was bearish engulfing bar. Next one, I will take this as an example, and in this case, if you look, I was having this bar, which is a previous than this bar, and this was bearish one. In this area, if the price break this level and went up, I will not take this trade. Why? Because I have this big bar here, which is showing me a big pressure of seller. So I'm not going to risk my account and enter. However, yes, it went all the way up, but this was risky at that time because you have big pressure of seller here. And normally when this happens, this is the shark, guys. The sharks in the market, they move the price like this. They want you to be trapped. So they sell, and you think it's going for sell, and you start to sell here, then they push the price all the way up. Then you are already trapped on sales. So whenever you have something like this uncertainty, spin bar coming within trading zone like this, don't trade. So this was bad example or not good bar, and however now you can see how we can make the combination of the bars. So let's discuss another one. So look at this one. If I see this one, I will not take a trade. It's a very big spin bar, but I will not take it because simply it is coming in the middle of the chart, and it is coming after all the way up exhaustion here. And let's say that this is the area of the support, and the price was not able to break it down. And even if you break it down, you can see the distance between this area and this area. It's very small. So I will not trade this type because the location of the bar is not good. However, look at this one. This is bearish engulfing bar, and I will not trade it as well. Why? Because the bearish engulfing bar is eating all the price down. So if the price moved 50, 60, $70, it's oversold. You're supposed to look for buy setup, right? So if you have from top bearish engulfing bar, and that bearish engulfing bar was big too much, like $50, $70, $60, you don't enter that bar because that bearish engulfing bar will be exhausted after a while. And this is what happened here. When this bar finish, it has immediately given me buy pressure. So if I have here entered, then I will be losing all my money because the bar is going fully again up to here, you see. So now I want you to look into this one. You look, the price is coming from this area down, continuation button, down, continuation button, then down. So in this area now, I have top and tail bar, and after that immediately I have bullish engulfing bar. So those guys are combination. Those are combination. So now the price has broken here, and now I have had retest here, and I have had the breakout in this candle here. So look at this guy. This is confirming this candlestick. And I can now place my stop loss here, and I can go up all the way here. So this is good trade. So the combination of the candlestick, it's confirming each other. I can enter here and put my stop loss here, no issues. And these confirming each other. So the combination of the candlestick, guys, and the location of the candlestick is very important. So let's go to this one. So guys, here I have big rejection after oversell. Here I have rejection after consolidation. And you can see this is my candlestick and this is the breakout here. So this confirming this. What is matter is the location of candlestick. This is at the resistance, this is at the bottom. So finally, guys, thank you very much for watching this tutorial video. If you like this video, please click the thumb button. If you have any question, leave it in the comment below. And otherwise, send it to me on my Telegram channel. In next video, guys, we're gonna go to start to explain the fundamental analysis and the fundamental news. Thank you very much and see you in next training video.